Hey everybody, it's Hussein Kabani, your favorite broker, and I want to talk to you about 2022 and the market crash that we're expecting. No, I'm just kidding. All right, so basically, just a very quick recap of 2021. As I'm sure if you're watching this, you're interested in real estate and you know everything was nuts, okay? So we're roughly talking about a 30% increase. Toronto Real Estate Board had the highest amount of units sold, which was 120,000 and change. So it was a record-breaking year for units and a record-breaking year for prices. Basically, we're at an all-time high in prices. We all know that there were several reasons why this was caused. One of them is definitely COVID, people looking for more space. They have flexibility with work, so they're kind of moving out. We know that immigration was very strong. I believe the final numbers that for 2021 immigration was about 410,000 into Canada. US, 10 times the population we are. They immigrated 50,000 people, so yeah, we brought in 410,000. Do the math. Aside from that, guys, just very, very low inventory. I'd say critically low inventory at a position that me personally have never seen, and a lot of people that have been around for a very long time have never seen this kind of low inventory before. So all of this, perfect storm to keep increasing prices and even lock people out of getting into the housing market. Okay, now that's in the past. Looking forward, 2022, is the market going to crash? Probably not. I don't think so. So what I expect to kind of happen over here is that instead of seeing 120,000 sales through Toronto Real Estate Board, I think we're probably going to see closer to 100,000 sales, okay? Even right now, the first 11 days into January is this number over here. We're basically about 30% less in number of units sold than we were even last year. Recording this right now, just about mid of January. Today was the first day that we actually just hit over 4,000 listings overall in the GTA. So hopefully, I hope by the end of January, we'll be somewhere around 7,000 listings available for sale. 8,000, I really hope so. It's not good, but it's not bad. It's pretty decent for us to kind of be there. And hopefully, we kind of pick up that steam with inventory going on. Another thing to mention over here is that it's kind of normal to start January with a low inventory position. What ends up happening in December is that we end up selling more MLS listings than we actually put on. So naturally, we're going to have a low inventory position at the starting of January. Just based on everything that kind of happened in 2021, we were at a critically low inventory position when we started off, but we are starting to see some momentum upwards in inventory. Not a lot. Hope to report some better news on inventory next month. That being said, there's a lot of talk about where pricing is going to go, and it's a hard call. There's so many factors to kind of put in. I've heard people say anywhere between 5 and 20% increase in the real estate market. One thing I haven't heard is a decline in pricing, okay? So everyone is very optimistic about where the pricing is gonna go. Yeah, last year was 30-ish%, but this year it doesn't look like we're going down. If I was to kind of tell you guys a number, I want to still put it kind of in that 10 to 15%, just because I don't think inventory is gonna get to where it needs to be, and I think that we're still gonna see a very strong buyer demand in the market. A couple of things I would say to kind of watch out for in 2022 definitely is going to be the interest rate. Interest rate is very tied to, again, a lot of different factors. One of the larger factors right now being all the different variants that are going around, especially I've heard about in China. So, you know, if China starts to see a large spread in this variant, it's going to cause an issue with our supply chain. A lot of our stuff is kind of manufactured over there. So it is going to cause a problem with us getting supplies in. The other thing also is that just overall in our economy, if we have these shutdowns and stuff like that, there's no dining in restaurants, we're not really stimulating that economy, more people are staying home, so that is going to be another factor. And with interest rates, I think that they were originally talking about starting to raise interest rates in Q1, then it got pushed to Q2, now it might be Q3. It's going to be really hard to tell. Now, when interest rates do go up, I think they're going to go up pretty gradually, okay? We can expect probably a quarter point at a time, every 2-3 months maybe, but they are going to go up. I'm very confident unless something really bad happens with the COVID situation that we are in. I'm pretty confident that the interest rates is going to go up at least 0.5% to 1% this year. This is something that they're going to have to do. Inflation is so high. I think we're at an 18-year high in inflation. And the only way that we can actually counteract with inflation is to actually raise up the interest rate. So it is something that we're going to see happen. And My advice to people is if they are purchasing, if they're going to go renew their mortgages and stuff like that, and depends on your personal situation, okay? If you're already kind of tight and you're getting maybe a rate of like 2.8, 2.9% on a fixed rate, and you can't withstand any changes in the market with interest rate, you might have to consider it and say, hey, I'm going to stay here long term. And that's the key with fixed rate. You're going to stay there for at least the term that you're going to commit to, because to break a fixed interest rate mortgage is going to be very expensive for you. So if you're planning on being at your property for that 3 to 5 years that you're committing to, and you're kind of tight on cash the way that it is, it might be better for you to kind of look at a fixed rate, maybe, okay? I'm still not a fan of it personally. I have a little bit of wiggle room. I'm still gonna play around with the variable rates, and it gives me a little bit more flexibility with my plan. So it's a very personal thing. But even if you're gonna go on to the variable, right now I think we can get rates at around, I know we could get lower, but like around 1.5%. You know, I would factor in everything at 2%, 2.5%, just to make sure you got that buffer space in case things do go up, okay? So that's gonna be one of the influencing things that I think that are gonna kind of slow down the real estate market a little bit. But I don't think it's going to slow it down enough, because initially what happens is when these announcements come out, and when this announcement comes out, I can almost tell you what's going to happen. The first rate increase, they're going to announce it. They're going to give everybody a heads up of what's going to happen. And we're going to all of a sudden see this buyer frenzy. And I think it's going to be bad news, because we're not going to be in a good inventory position the way that it is. And all of these buyers are going to come out of the woodworks that we're planning to buy in 6 months, eight months, and they're going to all hit the market all at the same time. So it is going to drive up the prices again a little bit, in my opinion. And then once see that interest rate go through, then people are going to be afraid. Now they're going to start to like retract from the market, and it's going to take a couple of weeks till people feel good about what's going on again, and they realize that, oh, quarter point didn't blow up the world. So then they're going to come back into the market and do it. And guess what? We're probably going to go through this cycle a few times. Every single time they talk about raising the rates, we're going to see a little bit of a like increase in demand, then we're going to see a pullback. Hopefully that kind of all washes. But overall, I think that is going to be one of our biggest factors, which is interest rates, the amount of inventory available. Hard to predict, but I think that in 2022, we're pretty much going to see a good, healthy real estate market. And all those people that are kind of sitting on the sidelines to get into the market and waiting for this big crash, I don't think it's happening. So if you are kind of sitting there waiting to get in, I think that you guys have to try to figure out what you can do to get into the market sooner than later. And also that's because my belief about buying real estate is that it's going to be always a long term. I'm not speculating in real estate. Yeah, maybe I am speculating, but I'm speculating in real estate for 10, 15, 20 years from now, okay? I don't have a 5-year real estate goal. My 5-year real estate goal is buy as much as I possibly can that I can somewhat comfortably manage. That's my thoughts about the 2022 market. If you guys want to have a specific conversation about your situation, I would be more than happy to. Feel free to send me a text message, give me a call. We could jump onto a Zoom, we can organize a Zoom. I can pop by your place, we can have an in-person, very safe. We keep our distance, wear our masks. We can do it somewhat that way as well. Guys, please like this video on YouTube, hit the subscribe button, and hit that little bell up there too, okay? So you're gonna be alerted when my new videos hit. They're very important. You should be watching all of them. And follow me on Facebook and Instagram. Until next time, guys, remember one thing: get Cabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.